Today, we're talking about the top dividend stocks and ETFs to watch this year. Investments that can help you beat inflation, provide reliable cash flow, and build long-term financial freedom. Stick around until the end, because I'll share a sample strategy for balancing growth and income. And if you find this helpful, don't forget to hit that like button and subscribe for more investing tips. Before we jump into the list, let's quickly talk about why dividend investing is so powerful. Dividend stocks are companies that pay out a portion of their profits to shareholders, usually every quarter or even monthly. Think of them like your personal cash machine that pays you just for holding their shares. But here's the key. Not all dividends are equal. A high yield might look attractive, but if the company's finances aren't solid, that dividend could be cut at any time. The real winners are companies with consistent, sustainable dividends and a track record of increasing them year after year. When you combine steady dividends with the power of compounding, you create a snowball effect that can dramatically grow your wealth over time. Let's start with some of the best dividend-paying stocks to keep an eye on in 2025. These companies not only pay dividends but have strong fundamentals that make them reliable long-term investments. First up is WEC Energy. This is a utility company that has built a reputation for consistency. They've been raising their dividend for over 20 consecutive years. And while the yield isn't sky-high, around 3 to 3.5%, it's sustainable. Utilities tend to perform well during uncertain markets because they provide essential services people can't live without. Next, we have the Dividend Aristocrats, a group of companies in the S&P 500 that have increased their dividends every single year for at least 25 years. This includes well-known names like Johnson & Johnson, Coca-Cola, and Procter & Gamble. These companies are the definition of stability and are perfect for long-term investors who want peace of mind. Financial stocks are also worth a look in 2025. Many banks have been benefiting from shifting interest rate environments, and with profitability improving, they're returning more money to shareholders. Several regional banks and big players like JPMorgan Chase are poised to keep delivering solid dividends this year. And finally, don't forget about REITs, or real estate investment trusts. A great example is Realty Income, famously known as the monthly dividend company. It pays investors every single month and focuses on commercial properties like retail stores and warehouses. REITs can offer higher yields, though they are sensitive to interest rate changes. Now, if you don't want to spend hours researching individual companies, dividend ETFs are a fantastic option. An ETF, or exchange-traded fund, bundles together a group of dividend-paying companies, giving you instant diversification and reducing the risk of relying on just one stock. One standout for 2025 is the Schwab U.S. Dividend Equity ETF, also known as SCHD. It's a low-cost fund that focuses on high-quality companies with strong dividend growth histories. SCHD is perfect for long-term investors who want consistent income and stability. Another strong pick is the Vanguard High Dividend Yield ETF, or VYM. This one includes a wide range of companies across different sectors, making it a safe choice if you want broad exposure without heavy concentration in one industry. For those seeking higher yields, consider a REIT-focused ETF like Invesco's KBW Premium Yield Equity, REIT ETF. This one comes with a higher payout but also higher risk, especially when interest rates fluctuate. It's ideal for investors who can handle more volatility in exchange for bigger income potential. And finally, don't overlook global dividend ETFs. Funds that focus on international markets provide exposure to companies outside the US, helping you diversify even further. Many of these funds invest in European and Asian companies that have a strong tradition of rewarding shareholders. While it's tempting to go straight for the highest yields, that strategy can backfire. A company offering a 10% yield might seem amazing, but if their finances aren't solid, they could slash the dividend, and the stock price will likely plummet with it. Here's a simple rule. Focus on dividend safety first, yield second. Look at metrics like the payout ratio, ideally under 60% for most companies. Mix stable dividend growers like Procter & Gamble or ETFs like SCHD with a few higher yield options like REITs or specialized ETFs. And always diversify across sectors. Don't put all your money in just energy, financials, or real estate. Here's an example of how you could structure a dividend-focused portfolio for 2025. 40% in stable, dividend-growing companies or ETFs like SCHD and VYM for long-term reliability. 30% in higher-yield assets like REITs or REIT ETFs for stronger income streams. 20% in international dividend ETFs to spread risk globally, and 10% kept in cash or short-term bonds as a safety buffer. This mix gives you steady income while still allowing for growth and diversification. To wrap things up, dividend investing remains one of the most powerful ways to build wealth in 2025. The key is to focus on quality, balance high yields with safe, growing companies, and think long-term. Whether you prefer individual stocks like WEC Energy or dividend ETFs like SCHD and VYM, these investments can provide a reliable stream of passive income while protecting you against market volatility. Thanks for watching. Which dividend stock or ETF is your favorite for 2025? Drop it in the comments below. I'd love to hear your picks. If you found this video valuable, make sure to like, share, and subscribe for more tips on building financial freedom.